Hey friends, and welcome to Technical Shots with LG, and welcome to natural gas markets weekly update for week commencing 24th of July. So last week we discussed about this particular doji, and we said that the markets are uncertain, as in neither the bulls nor the bears have control. So this was the candle where the market closed on last Friday, and then this red candle was Monday's candle. We can again see a red doji which is undecided, and then the prices have taken up from there. And you can see a big, big green candle, and then you know a small red which is a retracement, another big candle, and a small red retracement. And this is where the markets have closed. Now let's try and recap our TA which we have been forming from last few weeks, and let's try and explore what are the possibilities for the next coming week. So we discussed this from we are discussing this from last few weeks. So we have a descending triangle formation here. We have this rising floor which is acting as a support, and then we have this pink zone which is acting as a horizontal resistance, and that both of these components are forming a ascending triangle. Now we see the prices getting rejected here on roughly around the 14th of March, and then it's gone back here to the rising floor, supported on the rising floor, back here getting rejected by the resistance, supported by the rising floor, and this point here on the 23rd of June the prices tried to break out, but they were not able to sustain above the resistance. The sellers have pushed the price back. The prices again tried to break out on the 10th of July, but again you see the sellers straight away pushing the price down. And this week we saw the prices again broke out on this resistance, and this Friday closing we saw this red doji, or I would rather say a retracement. And if you look at closely at this red retracement or a doji candle, you can clearly see it is retesting the horizontal resistance. Now the next candle, which is the Sunday is open, is going to be a very important candle in terms of confirming this as a retest. So if we have a gap up here, then we can confirm this red candle as a retest, and the prices are going to move upwards. So that is what we are looking based on the Sunday's open. Now let's see what we discussed previous in the previous week, and let's see how we can build from the previous week's TA into the coming week. So we said that there was a descending channel here. So you look at this price is breaking out from the resistance, getting pushed back. Now in that particular process, we have a formation of a descending channel. Now last week we have seen this descending channel getting broken out, and the prices moving in the north direction. So as per the descending channel, the target what we have for this descending channel, a break of descending channel, is roughly around 2.82. We also discuss about this double top here. So if you look at this double top, which was a bearish pattern, but then we saw you know the prices actually getting supported on this amber trend line, which we actually explained in detail in the last week's analysis. So we said that the price is getting supported on this amber trend line. You know, this is the first support that when the prices bounced up. Second, this is the second instance where the prices took support. Last Friday, the close again, the prices actually took support of this amber trend line. Even on Monday, you know, the sellers tried to push it down, but the prices were supported on this trend line, and then we have seen the prices taking support and moving in the north direction. So if you look at it now, you know the double top pattern is almost negated, not 100% negated, because you see this green candle, the body is just below the this top, the second top. So ideally we want the body or any candle closing above this second top here. So this pattern is almost getting negated, but not negated at the moment. That's the reason we are saying that the Sunday's open candle is going to be very key. If we gap up, then we are clearly negating this double top pattern, and then it also confirms the confirmation of retest of this red candle, and then we have retested this horizontal resistance, and then we will be moving in the upward direction. We have a target of 3.33 for the ascending triangle. Now one more thing which we saw last week is if we get a trend line here and you know draw this here and another trend here and starting from here, so we have a bullish flag here. So this is the pole which I've highlighted in red, and this descending a bit of a part of descending channel is forming as a flag. So we see a breakout of the flag as well. So this is another bullish confirmation of the that the prices are ready to move in the north direction. So looking at this flag and the break of descending channel, we are seeing the prices moving in the upward direction. So so far we have two confirmations, and the third, if we have a gap up, this retest will be the third confirmation. So far it's looking good for the bulls for the upcoming week. Now let's go and see the hourly time frame. So let's see the hourly time frame here. So on the hourly time frame, you know this is the amber support, but we have another support getting established. So this green trend line, if you look at it on the hourly, it is acting as a support here. And then if you look at this green resistance, which I have highlighted, sorry, the green resistance zone here, so this is forming another ascending triangle. So you look at it, the price is getting rejected here, another rejection, third rejection, and then we see a breakout of this. Now as per this ascending triangle as well, we have price target of roughly 2.82 to 2.86. If you want to study the ascending triangle, you want to understand the ascending triangle in detail, please go to our channel. There is a separate video on the ascending triangle mastering series where I have explained the ascending triangle in detail. So coming back to our TA, we have this ascending triangle on our time frame, and then you can see it's broken out, and the prices are getting supported by this green trend line. Now let us go back to the daily time frame here. So on the daily time frame, okay, there we go, on the daily time frame. So we talk about the bullish scenario, but in case of the bearish scenario, what we need to do here is, or how can we confirm the bearish scenario? So the first sign would be we would be seeing a gap down. So once we have a gap down, then this retest it gets negated, and the prices will start going below the resistance. So the bears are going to take control. In that process, we're going to break this green support trend line, and then the next support we have is the amber trend line here. If we break the amber trend line as well, then we will be having a support on this rising floor. If we break this rising floor, then I think it's gonna be a bearish scenario, and I'm sure the bears gonna take control, and we can see prices heading towards 1.8, 1.9 soon. One more thing which I want to show or highlight here is, let me take a parallel channel here, and let me just form it on the put it on the amber trend. And if you look here, just gonna make the channel fit on the amber trend line, and you can clearly see it's a ascending channel formation here. So the formation starts from this particular point. the prices have gone up, rejected towards the top of the channel. The prices then have retraced, getting supported towards the bottom of the channel, and then the prices are moving upwards. Now, if you seen the last week's video, we've discussed this center line and the importance of the center line in this channel. The center line usually works either as a support or a resistance. So if you look at this channel, look at how the wicks are getting supported by the center line on these green candles, or getting rejected by the center line for these red candles. So next week, if we gap up on a Sunday, so we break the center line, and then some point we will retest it and then move ahead. So I'm expecting roughly around, as I said, the first target, or the first zone to capture would be 2.8 to 2.86, and then we can see high prices coming up. Also, when we went on the hourly time frame, the ascending triangle, it is giving us the third confluence for the bullish scenario. So we have three scenarios which are actually pointing towards the bullish scenario. Even this ascending triangle, we can see the prices getting supported at the bottom of the ascending triangle, and the prices are moving up. So in all, we are getting more bullish sentiments rather than bearish. But let's see how we open. The opening will be key, as I said. The opening always is very critical, and that candle actually defines. In this case, it is going to define the break above this center line. It is going to confirm the retest of this red candle, and so it is very very critical, the opening candle. So saying that, I think that is pretty much, I think we have covered. One more scenario we did discuss also about this symmetrical triangle. So this red descending resistance, which is actually starting from $3, and then again the price is getting rejected here, and then finally we broke out here. So that is again another scenario which is having a extra, adding extra bullish confluence in this TA. So saying that, I think that's pretty much I wanted to discuss for the week commencing 24th of July. If you find this video helpful, please give us a thumbs up. Please share and subscribe to our channel. Thank you for watching, and I will see you in the next one.